What is going on, family? All right, I am back in the saddle. Thank goodness. I'm feeling better here. Man, not 100% yet, but it was a bad couple days. Stomach bug, no bueno. Now, one of the things right now we're going to talk today about the potential slowdown taking place in real estate, which, I've chronicled, I've talked a lot about how the market will probably go sideways, and that's very, very likely. And it could happen for a long period of time as we digest the new normal for interest rates, and particularly as the life cycle of a buyer gets reset. And what that means, the life cycle of a buyer is from the time that they get it pre-approved until the time that they actually are in a home, which we can estimate is probably somewhere near, let's say 3 to 4 months in this market, something like that. Let's call it on average. So if that's the case, then you really need to see, 3 or 4 months of higher rates before we've fully ingrained into this as a new norm. And what will that do to the market? That's what we kind of need to see. So all the data points that I'm going to pull up here, they're all going to still look super bullish because they're, lagging data. So it's data from the past, and the past was obviously very, very good. The slowdown conversation that's taking place is at the hands of recent activity. So boots on the ground. I'm in the market, working on the market, working in the market. NMLS 155010. Give me a call, shoot me a text if you want to buy a refi. That's what I do. So, I can tell you that this past weekend turned out to be a blessing because I was so sick. But it was probably the slowest one I've seen in a long time, particularly Sunday. Extremely slow. Barely even had anyone reach out to me for anything. And that's strange. That's strange in this market. And Monday was also equally very slow. And those are typically, Sunday, Monday are two pretty busy days. Typically, Monday is a very, very busy day. And then things picked up a little bit yesterday. And we saw some things that were unique. I spoke to several listing agents. So I'm just going to I'm going to tell you what my experience has been, what the feedback that I've been getting is, and then we'll look at the data. We're going to talk about interest rates. I'm going to show you where bonds are at right now. Today we were down, but we've got some somewhat good news on that front as rates have, bonds have somewhat stabilized there. We'll look at a couple of these articles, and we'll look at some of the data. And we'll just kind of see, hey, this is where we are. Remember, this stuff, it's turning the Titanic. If the market really is going to shift, which I don't think it is, at least to like a bear market for real estate, I think we're going to more consolidate, which means we'll have some ups and downs. We'll have some opportunities. People will be able to buy homes under list price. People will be able to go and actually pull stuff off. I have a listing agent who told me yesterday that he had 2 listings over the weekend and didn't get either one of them into contract. And on one of them didn't have any offers at all. It was an $800,000 price point. But what I think the next step is, okay, if I'm right about this just being, a consolidation period where the mania has to go away, because a lot of people were so conditioned by the mania of this market that if we're not selling homes with multiple offers immediately and things are going crazy, they go, oh, the market's screwed. And that's definitely not true. But it is going to be normalizing, in my opinion. So if I'm right, what does it look like? Well, what it looks like is not everything sells over list with crazy multiples automatically. So stuff in the areas that aren't as nice, that don't have the good school districts, that are further away, those kinds of things, those are the listings, those are the properties that are now going to require a discount to the market, and not just, hey, people are willing to buy anything and they're willing to go crazy for it. The mania should subside. And if the mania subsides, you will see less people going over list. You'll see more people offering under list. You'll see less total offers on properties. We had 2 offers accepted this week with no counters. No counters. Not a counter. So in other words, the seller not saying, okay, you offered me this below list, by the way, below list with no counters. You offer me below list. Let me counter you at list. No counter. Not trying to scare off the buyer, which usually means that's the only offer. So if you're getting accepted with no counter, typically you're the only offer, and the seller doesn't want to scare you off. So I saw that happen twice. So here's what buyers need to know is, know that you don't need to go crazy necessarily. Keep a close eye on the situation. Look at how the listing agent is approaching you. Are they brushing you off, and telling you that they have lots of offers? They probably do. Are they following up with you, very aggressively? Maybe they don't. So we need to pay a little bit more attention, and you don't have to give away the farm right out the gates. I had another agent tell me that he sold a property. He said, hey, just want you to know, I sold this property $100,000+ over list. And I said, oh, that's great. How many offers did you have? He said, well, just one. So, did that buyer overpay is the question. I mean, they didn't get a counter. And so they paid what they offered. So you see what I'm saying? So for buyers, be a little bit more investigative. Don't just assume that every listing that you're making an offer on is going to be some sort of feeding frenzy. You can take some baby steps now, but the mania might be gone. And although rates are holding here, and we'll look at that in just a second, when we look at all the data, it's going to show you that there's still a huge bull market going on. So that's why I wanted to give you my perspective first. And if I'm right about what happens next is the mania goes away and you start to see some deals. Maybe here's one that the market overlooked. Oh, boom. That's a deal that someone can go and buy under list price. Or, hey, here's, and you start to see some deals happening here and there. And what will happen when that happens is there will be some people who get back in the market and they go, oh, it's not crazy anymore. Well, that was the reason we exited the market, because it was crazy. Then we'll see us come back up a little bit, and we'll kind of repeat that sort of pattern as we find and stabilize at this sort of understanding. Now, I don't know where that understanding is going to be. Is it going to be at today's price? Is it going to be minus 5%, minus 10%? I don't know. But I think it's probably going to be somewhere around, today's prices. And but I will say there is going to be an increased, probably a continued premium for certain areas. Let's call it Bay Park, Bay Ho, La Mesa, Claremont, Forest Ranch. There's certain places that are just, they're still going to be strong because they've been that way forever. The inventory's been so low for so long. Things aren't going to change a lot in those areas. Not as much maybe in some of the other areas. Let's talk about Encanto or maybe Barrio. A friend of mine selling his, I have a friend, I need to give a shout out to a friend who just absolutely crushed something here. My buddy Lee, he turned 13 grand in bar mitzvah money into what's going to be $1 million or multi-million-dollar 20+ unit property in Chicago. And he did it by buying two units in Barrio back in the day and keeping them through the crash and all that, and just made a huge profit, rolling it into a commercial deal. So proud of the guy. Just did everything right. Stuck with it. Perfectly executed. And so Barrio might be what he told me was he got about $75,000 less for his property than the original offers that he had, because he's doing a 1031. So he had to kind of do a long drawn out escrow process. And so they did sort of a long drawn out offering process, and the offers started decreasing as rates increased. So he said it cost him about $75,000. So there's a little piece of information, real world information. But that said, you're going to see maybe some of those areas, and the 2 unit was in Barrio. Some of those areas may come down a little bit faster as the frenzy subsides, because people who normally wouldn't have looked in those areas, but they were during the frenzy because they're like, it's the only place we can find something. Now they're going to go, no, wait a minute. If we're going to pay this much, let's make sure we get something right where we want it. Let's get the property that we want, or at least get the location that we want. Buyers will become a little bit more picky. And you'll see them, like we had someone who got into escrow yesterday and then immediately pulled out of escrow, went and did the drive and said, it's too far. And it's a beautiful place. So, it was a perfect home, not the perfect location. Maybe if things were a little crazier, like a month ago, they would have been stoked about it. But today they're kind of like, it's not exactly what we want. And so they backed out same day. And I knew the listing agent. I felt bad for him. He's a really good guy. So that's the kind of thing that's going on. And I think that is what we should expect with a jump this much in rates. I mean, remember here, the new weekly figure is going to publish tomorrow. We're at an average rate of 5.11% right now. And I think it's going to jump up to somewhere around 5.25% tomorrow. We'll see. I'll report on that. We did get the new median sales price for the country for Q1. So we went from Q4. Sorry, I'm in the way. Gotta get myself out of here. We went from in Q4, we were at 423,600. That's the average price in the country, median sales price. And then Q1 jumped up to 428,700. So still like a, 12% jump quarter over quarter. That's quite a bit. It's quite a bit. So like I said, all this data is going to be pretty darn bullish still. So because it's all sort of lagging, right? Let's take a look at interest rates here. Well, let's look at interest rates and then we'll look at altos. So this downtrend that we've been in here finally was broken. And this happened yesterday. So we got out of this downtrend after this candle right here on Monday kind of led you to believe, okay, hey, the downtrend is going to continue. We're headed lower. That didn't happen. We actually opened above and then tested the line and closed above the open. So yesterday was a huge day for mortgage rates because now we've reestablished a range again. We're out of the downtrend. And again, today, the downtrend line got tested again and we bounced off of it. So even though we're down 34 basis points today, we got a lock alert from Barry, who's very good about those things. Barry Habib, who runs mbshighway.com, where I'm getting this information from. But we bounced off of it and we're now back in this range, sort of comfortably in this range. So I think that is a good thing. As I was saying, last week, it's possible the worst could be behind us here. It's possible that rates won't keep going up. I don't think that's the case, but it's possible. Now, I might say, well, I still think rates are going to go up because there's a 60 or 70% chance that that's the case. But that would also mean that there's a 30 or 40% chance that the worst is behind us and priced into the market. And we're going to have a rounding bottom here in bonds, and then rates will get better. It starts to get pretty attractive when you have bonds in the 4 plus % range for investors. It starts to get pretty attractive. It really does. Definitely in the 5s and for sure in the 6s. We bring money from all over the freaking place. That's why I don't think rates will go above 6.5 in the worst case, but I could be wrong. We'll see. But we're nicely in this range here, and stability in mortgage bonds will help mortgage rates, even if bonds don't go higher. If they stabilize, they become a little more predictable. We stop having these big red candles. That in itself can help rates stay lower. So some good news on the rate front. And if you look here, let's go back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 business days. That's 3 weeks. Rates are pretty stable for 3 straight weeks. I'd say it's a great sign. It really is. I'm not changing my mind yet about where I think rates are headed, but I'm telling you that it's possible. It's possible the worst could be behind us. Imagine that. Imagine if that were the case. What would happen next? Then we wouldn't have a consolidation period. We would probably continue to moon. If you look at the data here, which is trailing, we're back to a 95. Look at this on the seller's market side, 95. Now, agents who had listings this weekend will tell you it didn't feel like a 95. Okay, they're going to tell you, hey, it felt more like a 32. But as far as buyers are concerned, I work with buyers. So I'm stoked. I'm like, hey, finally.
Yeah.
About time. Let's go. We got a chance to go out and make some offers under list and actually get accepted with no counters. Let's freaking go. I mean, and some buyers are still the mindset they have to spray offers around. You just don't have to do that anymore, I don't think. I don't think you need to go out and, make 12 offers, or even 2 or 3. Like, find the one that you really like now. It doesn't have to just be a race to get a house. You can kind of get the one you like. And not in all cases, but in many more cases. So you're seeing here, median price. This data is going to go back to January. Still big increase since January. Price per square foot, pretty nice increase since January. It's at 3 or 4% up since January. Average days on market down big time from 50 to 19. Price decreases still down. Price increases relatively flat. Relisted still down by half. But look here, this is the thing. Inventory up from 208 to 365. So let's look at that on the bigger picture here. So inventory has ticked up since the beginning of the year on here. 365 on the 7-day average, 302 on the 90-day average. So we've seen a tick up where we were at, here at 208 on the 7-day average. The 365. That's a pretty big difference. I mean, what's that increase? That's 75% increase in inventory. We're just looking at San Diego City here, not the whole county, but it just shows you that inventory has increased a little bit. And, that is something that is needed. Mind you, it is needed. We are at ridiculously low inventories, drought low inventories, scary housing crisis low inventories. We need some inventory. So if we get a little bit of inventory, don't just think the market's going to crash. We need it. We desperately need it. And we've needed it for a long time. So getting a little inventory is not a bad thing. It's really not. And the market action index, remember at the beginning of this year, market action index was 89. It's at 95. So the first phase here of things getting absorbed, higher rates being absorbed. The first phase, remember I told you this would happen. People go and jump off the fence and they rush out and they start getting into transactions because they know rates are going up and they want to get in before rates go higher. So we knew that was going to happen. Now I think that part of the phase is almost over, where we have the chance to kind of sit back and go, whoa, what are we doing here? What's going on? What is the payment again? I will tell you guys something. We do have, for 30-day escrows or longer, we have a new ARM option that's crazy low for conventional. You just need a 30-day escrow. As long as you have a 30-day escrow, you're good. Not a super fast bank, but a bank that's super duper low on the ARMs, which I'll profile more later. I just want to make you aware of it. So things looking good on the mortgage bond chart. We'll wait to see what this number looks like tomorrow. Okay, we'll get the new number tomorrow. And, this we will see for another quarter. I think next quarter's reading, for Q2, that will maybe look like similar. I'm going to call flat. It'll be very close to the Q1 number. I'll go get on record right now saying that. Today was interesting because the stock market tried to rally today and just kind of failed. Didn't really go anywhere at the end of the day, but there was some volatility. I was also watching mortgage bonds trade, and although it's a pretty tight range for the day, there was a lot of big moves happening there. So there's a lot of big money that's moving around. Make no mistake, that is definitely happening, and things are changing. The market is changing. But just because the market's changing doesn't mean that it's crashing. It isn't just either perma bull, crazy mania, or crashing. There's lots of in between. So let's keep that in mind. Yes. What's up, Camille? ARMs getting very popular. They are. Look at your timing. Adjustable rate mortgage demand doubles as interest rates hit the highest since 2009. Evan's so funny. This guy is hilarious. What's up, Evan? Like a softball team champ. Be aggressive. Be aggressive. You're funny. So how low are these rates? So the 7-year ARM, conventional ARM that we have, you have good credit, it's getting sub 4%. So the last one I quoted yesterday, 3.875. Now, I'm not going to pull rates up today. I'll probably do it tomorrow. But 3.875 on a 7-year fix right now looks really, really good. You need a longer escrow. I just found, we just got this bank online. It's a brand new situation. You need a longer escrow, but for conventional ARMs, it is a really good option. I haven't done a loan with them yet, so but I know people who have. So I'll see once I test the waters a little bit. But as far as rates go, they look amazing. So that was I think a 790 credit, and we're able to get down to like a 3.875 on a 7-year. So that's something that we'll be testing it, and I'll bring more information about that in the future once it's sort of been battle tested a little bit. But yeah, adjustable rates, they're not really there for the govies yet. FHA, VA, the adjustable rates don't quite make sense. They're just not less than the fixed, and if they are, it haven't been by much, not enough. There's just a small window where that was the case. So we're not really looking at those at the moment. But we showed you this earlier. Okay, so home prices jump like 20% in February, but slowdown may be coming. S&P Case-Shiller says. Well, what did they say exactly? Here it is. The macroeconomic environment is evolving rapidly and may not support extraordinary home price growth for much longer. Okay. This is Craig Lazara. He's the managing director of the S&P at S&P DGI. He said this in a release. The post-COVID resumption of general economic activity has stoked inflation, and the Federal Reserve has begun to increase interest rates in response. We may soon begin to see the impact of increasing mortgage rates on home prices. He's right. We haven't really seen what the impact is going to be just yet, but we might be at the very beginning stages of it. The real estate market does not move that fast. It moves slow. Even in the big crash in 2008, there were warning signs that were getting fired from like January 2007. Okay, there were foreclosure spikes that started happening in 2007. Actually, even in late 2006. So even in a worst case scenario, it took years for that crash to unfold. And that's why I'm telling people, like, a crash isn't going to happen here. And if it were, it would have to be down the line, and there would have to be some sort of fraud going on. There would have to be some sort of catalyst for massive inventory to hit the market. Right now, the only thing I could see that would possibly make that happen would be like if, not just one, but if a lot or all of the big companies, the huge money funds, hedge funds that have been buying real estate for cash, if they all decided to sell at once and liquidate for some reason. I can't think of a reason why they would want to do that, but that's really the only risk to the market right now, in my opinion. Let's see here. And this is kind of why I put this one on here. It's like, okay, is there some fraud going on that we don't know about? Because we didn't know before the 2008 crash that Wall Street had bought the ratings agencies and they were putting this AAA paper out there. At least everyone except for Michael Burry, he figured it out. Freaking genius. And he made a ton of money as a result. Billions. All he did was look at the pools of mortgages and go, hey, these aren't AAA. These are garbage. He just looked at them. That's all he did. Is there something like that going on right now that we don't know about? Certainly doesn't appear to be the case. I can tell you on the lending side, it's clean as a whistle. I mean, you have qualified people who can't even get into houses. So, just keep that in mind. What was the other? Was there one more on here? I think that may have been it for stories. Yeah, so starting the beginning process. Oh, yeah, I did want to mention Facebook. A lot of people have been following some of the different investments I've been talking about on here. Facebook had a blowout quarter. I've been accumulating it because, as I've said many times, it is a pure play on the metaverse. Facebook owns the metaverse. And while that thing might be 2, 3, 4, 5 years out from being a real cash cow, it is going to be a cash freaking cow.
All we want to do is pump you up.
And you can own the company that owns 100% of it. It's happening. Things are already moving very quickly in that direction. So when Facebook had the bad quarter last time, that's when I said, hey, this is the time, pull the trigger, start accumulating it. And that's what I did. And some people have started doing that. So if you didn't notice today, if you haven't seen this, for anybody who's following along or who's investing along in Facebook, up 20% after hours, $33 a share. So not that this is like what the win we were looking for or anything. We're talking about a multi-year investment, but just an FYI for people who haven't been paying attention to it. Facebook still is a great business all on its own. And by the way, it's a pure play to own the metaverse. You can own the metaverse, which is going to be massively huge. So that's why I'm accumulating it. But someone was asking me about Zillow stock today. I'm sorry, but Zillow's a piece of shit. The stock is a piece of shit. And the reason is because we've had a 10-year run in real estate, 10-year absolute raging bull market in real estate, and Zillow still can't make any money. They still can't make any money. If you can't make any money in that environment, then you suck. So I wouldn't buy that stock with your money. All right. Get that ran over with. If you guys have any questions, you need me. Derrick Evans here, VA Home Loan Specialist, NMLS 155010. Call me, text me. Shoot me an email if you want to buy or refi. Get a custom quote. See what it's all about. What kind of rate can you get for your scenario today? We can figure it out pretty darn quick. And I will tell you this. While the market is 100% for sure in the process of changing, the market is usually changing. That is a normal thing. It should not be in mania mode forever. It cannot be in mania mode forever. The only question is, what is the impact going to be? How bad will it be? I can tell you this, although I've only provided examples of what I would consider to be sort of warning signs, if you will, of what's going on in the market. There were plenty of instances this weekend where people were in multiple bid situations, bid well over list price, and did not get the home. So that's definitely still happening. There was a really good buddy of mine has got a listing that's a fixer, and he had like wall to wall people through there, offers all over the place. So there's not when I'm telling you these little, hey, this person had 2 listings, didn't get an offer. Those are kind of still outliers, right? But they're red flags, right? They're things that we need to pay attention to. Like, oh, okay, so that's happening. We need to be aware of that. Okay, that's happening. That's going on. That's actually a thing. And when that is the case, that it is a thing, we need to be aware of it. Because before you have a situation where the whole market is like that, you have a little bit of the market that's like that, a little bit more of the market that's like that, and a little bit more of the market that's like that. So that's what we just got to keep an eye on it. And that's why I'm constantly asking for feedback on Facebook from people that I work with. Hey, what's happening in your world? What are you seeing on the ground? There's no better piece of data than that, because all this other stuff that we look at, it's all trailing. It's all bow tie guy crap. You're looking in the past. Oh, I can tell you what happened in the past. What good is that to me? We're trying to predict what's going to happen next. We need to know what's happening right now. So it's important right now to get feedback, to see what's going on. I talked to some buyers earlier today who are buying the million range VA, and they said, we've noticed it as well. We've noticed that we're getting a little more interaction from the listing agents. They're following up with us. They're checking in with us. We haven't seen that. We weren't seeing that a month ago. They got married a month ago, got married, went on honeymoon, and now they're back on the saddle. And they're like, yeah, we can see kind of a stark difference between the market a month ago and the market today. We're having more conversations. We're in the mix more. Now, they don't have an offer accepted yet, but they've noticed a change in tone. So I think the real challenge here is going to be for listing agents to coach their sellers appropriately. That's going to be the challenge, to keep the market moving, right? Because what we don't want to see is like stale listings. And hey, if properties sell under list price, that's okay. List price is just a starting point, it's just a suggestion. It's not, that doesn't hurt the market, but it does kind of create a blood in the water kind of sentiment in the market, and that could cause things to be more negative than they need to be. So I think pricing appropriately, especially the properties that might be a nice property, but not in a great area, not in a super ideal, super sought after area. Those kinds of homes which were flying off the shelf, a month ago, that's probably not going to happen now. So if you have that listing in 92105 or 92102, that's not in the perfect spot, but it's a nice place. Maybe it's a reno, maybe it's a flip, and it looks good. That one's not going to quite go the same way that they have been. That's my guess. So let's see here. What is Camille saying? What's up, Scott? Let me get myself out here so I can see what Camille has to say. Oh, it's not showing over this. Got an offer accepted in Coronado on Friday. It is over $2,000 a square foot. Yeah, Coronado is one of those places, right? We were talking earlier about Forest Ranch, La Mesa, Claremont, Bay Ho, Bay Park. There's certain places where you're just going to win. Carmel Valley. There's places where like you're going to see a lot less impact for this consolidation phase that I think we're going to be in. And Coronado is definitely one of those smaller markets that's very niche. 2,000 a square foot though. Sheesh. That is wild. I hope it was a studio or something and not like a 5,000 square footer. Camille sells all kinds of real estate. So bottom line, ears open, eyes open in this market. Let's start paying attention to details. If you see things out there, team, my real estate friends here in San Diego, please report it to me. Let me know what's going on. Let me know what you're seeing. Hey, good, bad. I want to know just stuff like that. Like what Camille just said. Hey, that's a very bullish sentiment, right? People are telling me, hey, I've got listings that don't have an offer and we just reduced the price 25 grand. I'm hearing that same thing too. So if the market is mixed, what does that mean? That means we're just headed more towards a balanced situation, which would be great for buyers. It would be great for the people that I'm trying to help. So I would be totally okay with that. And I know a lot of buyers out there would be okay with it. And I also think it would bring a lot more buyers back to the table. That's really going to be the test, right? If we do see things sort of pull back a little bit, let's say we see a 5 or 10% sort of slump in activity because sellers are still overpricing their home. They're not getting great guidance on what's happening in the market. Rates continue to move higher, which is, I'd say, most likely. Although remember, possible rates might be topping. It's possible. We can't ignore that as a possibility here. We've got a really nice formation. When mortgage bonds are done selling off, this is what it's going to look like. That doesn't mean this is it, but this is what it's going to look like. A rounded bottom like this is almost always a sign of a reversal. Almost always. Not always, but almost always. And this is sort of a unique situation. So we'll have to wait and see. But we've got to coach sellers appropriately, and buyers who are out there, for people who are pre-approved with me who are seeing this right now, just continue to look at the market, continue to see properties, and just know that it's not necessarily going to be a manic situation for the property that you're interested in. You don't have to go guns blazing, put every single dime you have into it on the initial offer. You can be a little bit more tactful. You can be a little bit more conversational. Listing agents are willing to talk a little bit more. Listing agents are following up a little bit more. You can feel it out. You don't have to buy it right now or it's over. That's not the way it is. Like, if you don't put the offer in right now for everything you've got, you'll lose it. No! I think that time for a lot of properties is probably over. Now, that said, we mentioned the areas. Forest Ranch, Carmel Valley, Bayho, Bay Park, Claremont, La Mesa. There's others. Some areas are going to still be hyper bull markets because they've had such low inventory for so long. There's buyers waiting in the wings all over the place in those areas. So, listen to your agent is always my number one advice for a buyer. They are the expert. Listen to them. Follow their guidance. Over mine. Follow their guidance. But just keep that in the back of your mind, what you're seeing and what's going on. Okay, what you are seeing, experiencing as a buyer is what's actually happening in the market. So use your experience to your advantage. All right, guys, that's going to be it for today. Have an amazing day. I should be at 100% tomorrow. We'll pull rates. If you need me, give me a call, shoot me a text or an email. I'll be here for you. Or your friends or family, whoever needs help with the home loan quote, I got you. And just for... we didn't even talk about Elon Musk and Twitter, did we? Free speech is back on Twitter. If you aren't following Elon on Twitter, I'm telling you, you're missing out. You are missing out on one of the most epic, never-ending roasts of all time that is just relentlessly happening right now. And it's very, very tactful. It's very, very high class. And it is very, very matter of fact. But basically what's been going on Twitter is illegal, frankly. Not just unethical, but illegal. And one of the things that's really interesting about Elon Musk buying Twitter is that he didn't just buy Twitter. He bought evidence. And I expect to see some very interesting things coming of this because he now has access to every single thing that's ever happened on the platform. Yeah. So we'll see what happens with that. All right, guys, have a great night, and I will see you soon. Take care.